Gold prices under pressure this Tuesday. What's happening on the gold front? Bill Baruch of iiTrader is joining us now from the floor of the CME. Bill, good to have you back on Kitco's Gold Report.
Thanks for having me back on.
Well, let's look at the price action happening in gold today, Bill. What's happening here?
Well, the metal is finding some support at the 1080 level. It's been able to kind of jump around where it's been for the last few sessions, 1080 to 1090. And it's tested a little bit above and a little bit below that as well. I think the metal is basing, it's rallied very strongly off of those 1050 lows to start the year, something that we were predicting. But right now it is struggling to hold and get out above 1100. I still think gold should be up at towards 1130 area. Now with that, I mean, there's been a lot of reasons for gold to rally this year. The safe haven demand, a lot of the equity markets falling apart, and treasury prices, treasury yields continue to move lower. Now, I think it's important for gold to find traction at this level. Still, regardless, I do think it needs to make a move towards 1130. And the dollar, which has been an enemy of gold of some sorts, but is going to struggle at this 100 level in the dollar index. And I think that's also going to be supportive over the longer run.
So, Bill, let me ask you, are you surprised by what has been happening in recent weeks to the broader markets?
Yeah, I mean, I am surprised. I'm surprised how quickly the market has fallen apart this year. Now, weighing on that is obviously China, as well as crude oil. Crude oil is taking some major heat, now below $30 this year. So seeing the markets fall apart, I think the fact that gold is gaining traction only because of a safe haven bid is the reason why it's really not excelling. On top of that, commodity prices such as copper and crude oil have really held back gold and silver. You know, the low prices of these commodities are making it very, very difficult for gold and silver to gain traction. And only when you see gold and see copper and crude oil start to be able to consolidate and not lose value, I think gold and silver are ready to run to the upside.
Now, the news of the slowdown in China, obviously didn't help gold, but it didn't hurt silver. Now, was this a surprise since silver is an industrial metal?
Yeah, it is. I mean, we're seeing silver barely be able to get above $14. Now, a lot of that, too, is, again, it's copper and crude oil holding back silver. Silver was able to go green on Tuesday when gold was red and able to gain more traction. Copper recovered 7 cents from its low. Now, and that, I think, moves silver. So you're going to see silver really having a difficult time unless these other commodities are able to get going. And a lot of that is China. The GDP data came out as expected. The fixed asset investment, industrial production, retail sales all missed marginally, but slowed in the last month. And I think that's important too. Now, seeing the marginal miss, it leaves the door open for further stimulus out of China, and I think that as well was the one reason why silver and copper were able to get going a little bit. The other part of it is the yuan. The yuan is continuing to lose value, and news that they were going to they were requiring higher their RRR requirement on offshore was the reason that the yuan made a recovery on Tuesday's session, and that helped copper, that helped crude oil, and that also helped silver. Initially, crude oil failed towards the end of the session as well, but I think seeing that movement out of China is what's important to see commodity prices gain traction, and it's not going to happen over one day. It's going to take a little bit of time because they've been beaten up just so bad.
All right, Bill. Well, just to wrap, you mentioned crude oil. Do you see it rebounding anytime soon? I know you said it can't happen overnight, but what does it look like for you here?
Well, it depends what you value a rebound as. Now, the thing about crude oil is the February contract, which is not traded anymore, it goes off the board on Wednesday. After it closes and expires, we think the March contract is going to be able to move higher. There's been 4 instances when the expiring contract was on the lows. It stays against the lows and makes new lows into expiration. Now we're looking at the March contract. Once this happens on Wednesday when the February goes off, we believe the March contract is going to be able to recover. This recovery could be $3, it could be $5. Now if the stock market at the same time recovers as well and they work hand in hand, we think there's a longer leg higher in crude oil in the immediate term. You can see that over the next week to 2 weeks or even a month, and you can see crude oil rally $5 to $10 from this level. That's going to help gold and silver. Now, the problem with gold at this point, too, is it's relying so much on the safe haven bid that it's going to have to chew away some of this safe haven bid in order to move with the commodity prices if, per se, the commodities recover.
Got it. Thanks so much. Good thoughts from you today, Bill.